Hey everyone, Thomas Wood with Algo Trader's Edge, and we're going to take a look today at the ATE Micro Index Portfolio. Now, before we get started, just keep in mind this presentation does not constitute an offer or solicitation of an offer for the purchase or sale of any securities. There is always a risk in trading and a risk involved with trading the markets. Keep in mind as well, past performance is not necessarily indicative of future results. Now, with that being said, let's talk a little bit about what the LOD model is and how the ATE Micro Index Portfolio works. Well, we offer daily liquidity. What you do is you're paying a monthly, quarterly, or annual fee to have these systems executed on your trading account. So you're leasing these systems on a monthly, quarterly, or annual basis. It offers diversification into automated trading strategies in the futures market, which is a part of the portfolio that most individuals out there do not have access to because it's a more complicated and sophisticated way of trading. What we're doing, we have a goal of removing ego. In other words, getting rid of the emotions, greed, and opinion by using fully systematic and automatic rules-based trading. Now, the minimum account size for the ATE Micro Index Portfolio is $10,000. So let's talk a little bit about the investment strategy. It's a quantitative, systematic, algorithm-driven trading strategy. We use time horizon diversification, so we have systems that are long-term as well as systems that are short-term. We have long-only and long-short systems at play, so we have the potential to profit in any economic or market environment, which we'll talk about how it's performed here recently in the 2020 down move that we've had, or bear market that we had in the stock market overall. And it also minimizes account volatility while maximizing returns using leverage. So with that being said, here's an example of what I mean by decreasing the volatility. This is showing the ATE portfolio versus the S&P 500. The ATE portfolio is this blue line here. You can see it just steadily is climbing up, while over time, like for example, in 2007, 2008, when we went through the bear market, and then again here in 2020, the markets have tanked, but the ATE portfolio has stayed pretty steady throughout the year and held on for much of the up move. So let's talk a little bit about how the systems work and how they're diversified. The systems use advanced algorithms for market bias. We use trend following and market sentiment based strategies, as well as pattern recognition and machine learning for identifying potential entries. They're fully systematic. They remove what we call, like we said before, ego, emotions, greed, and opinion, and they're fully automated. Now, the systems have the ability to adapt to changing market environments, so they'll adapt to changing volatility environments, and we have the ability to simultaneously go long and short correlated markets to lower the volatility and decrease risk. So we may be long the S&P and simultaneously selling the Russell or the NASDAQ. Now, the systems use long-term trend following in addition to short and intermediate-term long-short signals. So this allows us to take advantage of the long-term overall upward trend of the markets while simultaneously trading inside of the short-term volatility to maximize gains and minimize drawdowns. Now, we achieve this lower volatility by diversifying systems across positive asset classes, positively correlated asset classes, including the S&P 500, NASDAQ 100 index, and Russell 2000 index futures markets using the micro index futures contracts. Now, a trade construction, when we look to get into these positions, it first determines bias. So it determines which direction we want to be trading. Then it will determine an entry signal. And then we will have a stop in place and then a target. And it will allow the market to move until it either hits the stop, hits the target, or hits a trailed stop or managed stop, managed exit. So here's an example. This is the micro NASDAQ contract. And you can see had a nice big long trade here. And then we had another long that quickly got stopped out with a very tight stop. Then another nice big long trade here. And by doing this, what we're doing is we are allowing the winning trades to make much more on average than what our losing trades lose on average. Now let's talk a little bit more about risk management. We have portfolio risk management, so there's a maximum stop loss for every single trade. We've also gone through and run Monte Carlo simulations, so we know what the maximum acceptable drawdown is for any given market. We start with smaller positions, and then we have the ability to build into larger trades as the market continues to progress. So that we don't go all in on the very first entry. A lot of times what we will do is we will jump in initially and then build a position over time. Here's an example of that. This is the micro S&P. This is a long-term trend following strategy that's a part of the micro index portfolio. And you can see it starts off with one contract and then we'll add to it and then add to it again to a maximum of 3 and ride that out for a bigger move. Example here as well. You started with one, added another one, and then added a third and rode it all the way up. Now this is good because, for example, here where we had a losing trade, we only had one contract on the losing trade, but we had 3 contracts on the winning trade, which helps increase our winning strategies and make our winners much larger on average, again, than our losing trades are. Now the performance of this system. Over time, back tested, this is the performance. We average about a 35.4% annual return on a $10,000 portfolio. We have a win rate of about 50.16%. Our maximum drawdown is 17.24%. Now, with that being said, here's the monthly performance if you want to see the monthly performance numbers. Now, you can see January, we had a great month covering a lot of those longs in the micro S&P. February, a little bit of a drawdown, and then March and April, we've continued to make money, even though the markets have been really crazy here in 2020. Last year, we had a really nice year up around 3,700, and the year before that, we were up around 11,000. So doing extremely well over time as long as the markets continue to move. And again, this portfolio really outperforms when we do have long-term bull markets. Now, if you're interested in getting started with the ATE micro index portfolio, all you have to do is go to algotradersedge.com and you can get started today.